According to a recent study, 55% of US-based Bitcoin investors bought Bitcoin for the first time this year in 2021. So chances are, if you're part of that 55%, this whole number going down thing is kind of new to you. It's supposed to be the opposite, right? It's supposed to be that you buy in and the numbers go up in cryptocurrency. For those of you that have been around a little bit longer, maybe those of you that make up the 45%, you understand that this is a very volatile space, this crypto market. And you do hit patches where, from the more narrow perspective, it does look a little bit ugly, but you got to zoom out and understand that even the worst volatility will pass. And the question can be asked, are we in a bear market? The truth is we don't know, but are we in a volatile market right now? Definitely. As of today, we're going to start reporting on how to best navigate these volatile waters, these stormy seas that we're currently facing, so that ultimately you, the viewer, and your portfolio, perhaps more importantly, can come out on top over the long term. All right, so if you're ready to get started, let's start talking about how to best manage these volatile crypto markets. Hey guys, my name is Maddie and this is Altcoin Buzz. We are a crypto investment research company and we've been making millionaires in the cryptocurrency space despite all kinds of volatility since all the way back in 2017. We've been major public early investors in big winners such as Ethereum and all the other projects you see here on the screen, as well as many other projects that have netted us 100x plus profits. And if you don't want to miss out on the next potential crypto gem or altcoin moonshot, my recommendation is to, number one, like this video, subscribe then to our YouTube channel, Altcoin Buzz. Also hit the bell to receive notifications because that way you are alerted by YouTube every time we publish new content. Additionally, you can also choose to go to the next level and gain access exclusively to our early research tips on the next potential 100x crypto using Altcoin Buzz Access. More information about that, if you're interested, can be found and is available using the link in the description. Quick disclaimer, guys, there's no such thing as an investment that is 100% risk-free, whether it's crypto or otherwise. There's always some element of risk. And so, just as a friendly reminder, this video does not constitute financial or investment advice. With all that being said, let's discuss how to best manage crypto volatility. It seems like every day recently we're waking up and seeing our portfolio is down another 5%, down another 10%, maybe even down 20% or more. Yes, we thought the 20% decline was the bottom, but then it slid even a little bit further. So you thought you bought the dip, but then it dipped even more. If this is your first experience in the crypto space with volatility and assets moving against you, then you probably have a lot on your mind. And it can be stressful and it can be anxiety provoking the first time you go through it, but it is normal, rest assured. And we know that because we've been there, but we got on the other side of it and you can do the same. And you're potentially thinking about the worst case scenario right now. You're thinking, oh, is my investment gonna be rug pulled and am I gonna lose everything? Is all this negative news true? And perhaps most importantly, what's really going on? Well, this FUD, fear, uncertainty, and doubt, is a popular subject on crypto Twitter, and now you're seeing one of the reasons why. Everyone, of course, seems to have an opinion, but forget all the noise, forget all those opinions. It's really all about you at the end of the day, ultimately. You need to understand your position in the long-term market life cycle, and this includes an emotional and perhaps psychological strategy along with a financial strategy that is tuned specifically to your goals. Those are the only ones that matter. So what exactly happens in a downtrending market? Well, crypto professionals know that corrections in the market are common. In fact, they're a regular part of volatility, and we can expect that volatility in this space. Volatility is one of the things that makes the crypto market what it is. It provides for opportunity, if you think about it. But really, there are things that we can do to help ourselves when we do encounter this volatility. Starting with our mindset, here are a few tips. So number one, let's begin with that subject, the right mindset. Don't become overly emotionally attached to your portfolio. You just need to ensure that you've invested in strong projects. Perhaps you want a dollar cost average on the dips, but don't worry about it if you're in it for the long term. You've invested in the right projects and have confidence in your choices. Number two, understanding and analyzing risk. Analyzing your risks is more important in a bear market than in a bull market. You need to understand that there will be many projects which will not survive this bear market, and you need to identify them and, if necessary, rebalance your portfolio. Look at all the things that we talk about on a regular basis. Reassess the company and the team, the project and the product, the traction and the marketing, the tokenomics of the project, the popularity and the strength of the community based on company's maturity, regulation, and take a look at the competitive landscape and analyze that. When you have a project that shows positive signals in all these areas, it should be considered a low-risk project. Also, try to understand if there are any red flags regarding the project, such as coins that need referrals to gain value, anonymous ownership, investing first to knowing more, closed source code, and unaudited codes. Stuff like that, that's never a good sign. Also, remember that any red flag is a high risk, and that's even more true in a downtrending market. Number 3, it's important to understand returns. You can't understand how to protect your money or possibly even make more money on your crypto investments without understanding returns. Fully diluted market cap is a good measure to understand the probability of the reward of a project. So for example, less than $30 million in total market cap is equivalent to very high potential rewards. And then in the neighborhood of $30 million to $100 million, you're still looking at high rewards. $1 to $500 million, you're looking at average rewards. Anything really above $500 million, that's going to correspond to lower rewards, just because it's much harder to move the needle at that level. You need a much higher infusion of liquidity to have similar percentage gains to some of those lower cap projects. And what is a fully diluted market cap? That's when we take all the total supply of tokens into account, not just the tokens available in the circulating supply. Why? Well, because that supply will grow over time, and if you've learned about their tokenomics, and it could present added downward pressure on price. By the way, we don't invest in projects without a known transparent schedule of when new coins are released into the market. And considering both risk and reward scenarios simultaneously, you can make a better investment decision. If you want to see how we apply these tips making real-time investment decisions, then go back and check out a couple of our videos. We have 2, in fact, part 1 and part 2 on our top 5 altcoins to buy during the crypto dip. And since you're going to have a better understanding of navigating this volatility, we're going to show you exactly what we're recommending now and why. We're going to provide links to this, of course, at the end of this video and in the description below. Tip number 4 is to make sure you learn a project's evaluation. So volatile markets like this are a great time to get better educated about the market and your projects. Bear markets are the time to understand the good and the bad. And the projects with the right fundamentals always survive these downtrends. Take the example of Binance in 2018 and 2019. When everyone else was fudding, Binance took it as an opportunity to build, and simultaneously many other projects disappeared. And not only did BNB recover nicely and grow, but Binance became one of the largest, if not the largest, crypto exchange in the world during this time by taking advantage of that bear market timing. And looking at it today, as you can see, that awful bear market is only a blip on the BNB chart today. At number 5, we're suggesting that you guys make intelligent investment decisions. Now, that goes without saying, but let's elaborate a little bit. A bear market is an opportunity to make low-risk profits. So if you can invest in a bear market, you're actually investing at the bottom, hopefully, and hence the probability of you making a profit is much higher. You just need to understand what to purchase and when to purchase in a bear market. In the 2020 Black Swan event, we're talking Friday, the 13th of March, Cardano was down to just 4 cents. But in a year, its price has moved to more than $1. And in fact, it's seen all-time highs of over $3. So things change very quickly. As grim as things may look, maybe currently, or as bad as they have looked in the past, just remember that great projects continue to win and continue to outlive the bear markets that beat them down. Finally, and perhaps most importantly, you want to understand market cycles. Markets have their own psychology, and these moves happen over and over again cyclically. You have to learn them, you have to live them, and you have to love them. And when I say love them, it means capitalize, understand them, and benefit from them. Learn to take advantage of the buying opportunities that are afforded once you get down into the capitulation, anger, or even depression stages of a market cycle. One last tip on market cycles, notice that the areas between peak, trough, and peak again, in that space, you have a lot of things happening. So do not fall into the trap that just because the market is moving, you think you need to make a move right away. Often the best thing to do is to watch and wait, and you will get your chance to get back in or to buy more, but don't let a downtrend affect when you do these things. there will always be another bus coming, even if you miss the first one. Let's talk about what not to do in a downtrending market. So some common questions that we get from our subscribers are kind of along the lines of the following. Many of them are good lessons on what you should not do during a downtrending market. Let's have a look. Question: can I hedge with NFTs? How does the NFT economy work in a bearish market? And can we do cross trading between coins and NFTs? Well, NFTs by their nature are non-fungible. So no, you can't hedge them. There is no specific order book or AMM for them, and they are unique. It's not like USDC where one USDC is no different than the other and it's easy to trade. NFTs are something entirely different. Trading NFTs is really more based on auctions. Here's another question. What are my options for moving from manual trading to algorithmic trading, and what type of algorithms? Well, there are lots of bots available for algorithmic trading. They have different strategies embedded in them with different indicators. You can set which indicator you want to use and customize it too, but bots work well when the market is trending, either bullish or bearish. If the market is non-directional, bots really can generate a lot of loss. Some good platforms for this are Mudrex, Signally, Prime XBT, and Covesting. Can I move to synthetics in such a case, like a move to Tesla from DOT? You have very limited options here. The synth market is a very nascent stage, at least that's how we currently see it. Can I purchase IDO tokens to get into IDOs in a bear market? This could backfire. You need to have expert guidance here. My recommendation is to subscribe to our channel to get the insight into potential IDOs in such a volatile market, but in a downtrending market, many IDO tokens are currently underperforming and will continue to underperform. Many are trading even below their private sale price, and tokens are vested over a broad period, so you can't even sell them if you wanted to, unfortunately. At the end of the day, guys, the market is going to do what the market chooses to do. But on the flip side of that, you can take advantage of the market at every opportunity. Whether it's bullish, whether it's bearish, there are always opportunities to capitalize. Changing market conditions are a great time to learn, to evaluate, and if necessary, to reevaluate some of the investment choices that you've made. Be a rational investor. Be unemotional in your decisions. Be diligent, be consistent, and be disciplined. And we're sure that you're going to have every opportunity to make the most of this. Your portfolio will thank you. It's just a question of your time horizon. Guys, if you're still watching this video, be sure to like, subscribe, share, and hit the bell to receive notifications. Never financial advice as a reminder, but we do wish you all the best of luck if you choose to invest. As promised, check out these other related videos here for our top 5 picks, our top 5 altcoins, part 1 and 2. During this downtrend. Stay safe, members of the Altcoin Buzz Army, and as always, we do hope to see you again soon in our next video. Take care.